Most people believe the biggest decision of their life is who they marry or what career they choose. But statistically, neither of those will cost you as much as one decision you probably made in under 30 minutes. Your mortgage. Not the house, not the neighborhood, the numbers inside the mortgage. 3 numbers, quiet, boring, ignored, that decide how long you work, how much stress you live with, and how free your future actually is. Today, we're breaking down the 3 mortgage numbers that silently decide your entire life. And if you understand them early, you don't just buy a house, you buy back time. A mortgage isn't just a loan, it's a lifestyle contract. It decides how many hours you must sell every month, how much risk you can afford to take, whether quitting a job is freedom or financial suicide. 2 people can buy the same house, and one ends up wealthy, flexible, calm, while the other stays trapped, anxious, and overworked. The difference isn't luck. It's not income. It's not intelligence. It's understanding 3 numbers most people never question. Let's start with the most dangerous one. Number 1, interest rate, the silent multiplier. Most people see interest rate as a small percentage. 3%, 5%, 7%. Looks harmless. But interest isn't a fee. It's a multiplier on your life energy. Let's say you borrow $400,000. At 3% over 30 years, you don't repay $400,000. You repay over $600,000. At 6%, you're closer to $860,000. That means you bought 1 house, but paid for 2. Interest rate decides how many extra years you work, how much money never becomes savings, how much wealth you never build elsewhere. A single percentage point can mean fewer vacations, delayed retirement, permanent financial pressure. And here's the trap. People negotiate the price of the house aggressively, but accept the interest rate passively. That mistake alone can cost decades. Number 2, loan term, the timeline of your life. 30 years. That number sounds normal. Everyone does it. Banks love it. But think about what it really means. You're committing your future income, your future energy, your future flexibility for 3 decades. A longer term feels safer because the monthly payment is lower, but safety is an illusion. A 30-year loan maximizes interest paid, delays ownership, keeps you financially vulnerable longer. A 15-year loan costs more monthly, but slashes total interest and gives you freedom faster. The real question isn't, can I afford this payment? It's, how long do I want this obligation controlling my life? Every extra year on your mortgage is a year where job changes are risky, entrepreneurship feels impossible, freedom stays postponed. Loan term isn't about comfort. It's about how soon you get your life back. Number 3, debt-to-income ratio, the stress meter. This is the number most people never think about. Debt-to-income ratio, or DTI. It's simple. How much of your income is already promised to debt? Banks use it to decide if you qualify, but life uses it to decide how stressed you are. A high DTI means every paycheck is already spent. Emergencies become disasters. Small setbacks cause panic. You might technically afford the mortgage, but emotionally, mentally, and strategically, you're cornered. High DTI kills risk-taking, creativity, long-term thinking. It forces you into survival mode. And here's the cruel irony. Banks approve mortgages at DTI levels that guarantee financial stress. Approval doesn't mean safety. It means profitability for them. A healthy mortgage leaves margin in your life. Margin for savings, investing, rest, unexpected opportunities. Without margin, even a beautiful house becomes a cage. The combined effect. How these numbers shape your life. Individually, these numbers matter. Together, they define your future. High interest plus long term plus high DTI equals working longer than necessary, fearing layoffs, delaying dreams indefinitely. Low interest plus shorter term plus low DTI equals faster freedom, better sleep, real choices. The mortgage isn't just about shelter. It's about how early you can slow down, how resilient you are in crises, whether money works for you or owns you. The rule most people never hear. Here's a rule that changes everything. Don't buy the most expensive house the bank allows. Buy the house that leaves you room to breathe. Banks measure risk to them. You should measure freedom for you. If your mortgage payment disappears tomorrow, would your life improve dramatically? If the answer is yes, your mortgage is too heavy. The goal isn't ownership. The goal is optionality. Before you sign anything, ask yourself, how much of my future am I selling? How long am I committing my energy? How stressed will I be if life doesn't go perfectly? Because the house doesn't decide your life. The numbers do. And once you see them clearly, you stop buying homes like a consumer and start choosing them like a strategist.